Hello guys, FairBinary We are looking at the Euro US dollar. This is the 4-hour chart, and what more to say that we are preparing for the FOMC. You know, FOMC means Federal Open Market Committee. There is the statement to come Wednesday. By the time the let's say after the London session, when the New York is going to open, we have somewhere in the middle of the session of the American session, we're going to have the Federal Open Market Committee, the statement, basically the interest rate decision in the United States. Now, while no one is expecting for the Fed to increase or decrease the interest rate, the talk is, or the risk event is that the Fed is going to taper another $10 billion, and this should be viewed bullish for the US dollar. However, we like to buy, let's say, to build a bullish scenario for the Euro US dollar. So basically we are building a bearish scenario for the dollar, and we like to buy call options, and therefore we will set up the time frames and the scenarios here on FairBinaryOptions.com. Now, we are not going to buy them right here, right now, but we'll have some validation or invalidation levels. And that being the case, I would still say that the Euro US dollar is traveling within a triangle that has the previous waves, the B and the D waves, to be the following ones. One moment, let me change something like this. And another trend line that comes from the lows like this into this area like this. And this to be called the B and D and A and C trend line. So this to be a B wave, this to be a C wave, and this to be a D wave. Now, of course, what's missing? Well, we have a wave A that's on the left side of the chart. It doesn't really matter to go there, but we are also looking for an E wave to come at to end the triangle. Now, this E wave can basically be any shape it wants, as long as it is a corrective one, but not an elongated flat. So we're looking for something like either a triangle or a complex corrective form of a lower degree, but I would say that we're going to have here most likely a double combination or a triple combination, or a double zigzag or a triple zigzag. Well, a double zigzag is definitely not, because we have here A, B, C, and then an X wave. So of a lower degree, let's try this one here. So this would be wave A. The B wave to the upside. And the C wave to the downside here. So A, B, C, and then of course we're looking at an X wave. And now we're looking for another corrective wave that can be, again, either a contracting triangle, or it can be a zigzag of a lower degree, or it can be a flat of a lower degree, so that the market does a double combination. But anyways, the E wave can be done either here, or stuff like that. Now, this contracting triangle, blue contracting triangle, is actually a non-limiting contracting triangle in terms, and that means that price action that follows this triangle usually has no limitations. It cannot be let's say put into specific behavior, and therefore the E wave can even go and retrace that much. What I would really like to do here is, long story short, is to buy call option when price is retesting this area here, previous area, support, broken, then resistance, and resistance broken. So on a dip lower, this is something like 136 area, okay, 136 area, 135.90, let's say, So let's make it a bit bigger because it is also a psychological level. I would like to buy, let's say, call options between 136.10, all right? Something like this. It's too much, therefore 136 area. So between 136 and 135.90, I would like to buy call options with end of week expiration date. So the only expiration date we are targeting here on the Euro US dollar is end of week. This is planned for the FOMC, so the FOMC is going to come with huge volatility. So we're buying this end of week expiration date. And of course, we are also interested to add to the long side if and when market is breaking this B2D trend line. There are some important clues to watch on this B2D trend line, but if market turns like this and we fail to get filled on our call options here, then we will like to add to the upside to buy more call options here. Both of the situations, so both situations should point to the same direction, buying call options and with the same expiration date. Normally, if this is broken in the respective amount of time, it implies a bearish outcome out of the FOMC, and therefore until the end of the week we should see higher values. Therefore, buying call options or looking to buy call options by the time price reaches the two areas with end of week expiration date. End of week expiration date means Friday 21 GMT. That would be our recommendation. And this kind of expiration date is being basically offered or given by any respectable broker. Now this is fairbinaryoptions.com, and we are trading with Lionknife, our official sponsor, and make sure you are checking lionknife.com as well. Thank you and keep in touch.